As rents and mortgages rise, is multi-generational living the secret to thriving in these tough economic times? Today, we've got a question from Seb about affordability, how much you can borrow, and we're going to show exactly how you can calculate it right here, right now. Let's dive in and start off on the top. As we see mortgages and rents rise, we're starting to see a movement of multi-generational living. Is this the actual secret to thriving in economic tough times? Well, today, let's take a look and have a look and see what's going on. So I guess starting down to the possibility of taking a larger mortgage to buy a house for something they could barely afford, Luke and his wife, Claire, decided to try something different. Instead, the couple moved in with Claire's mother, Sylvia, and took a much smaller mortgage to renovate their house. Now, this is probably not a bad idea, as we've seen properties that's specifically closer to the city and all capital cities around Australia during pandemic time really had a massive growth. Even regional areas had a massive increase in values, anywhere from that 20 to 30% increase. So getting a smaller mortgage, having that affordability piece is certainly something that makes a lot of sense. Now, the idea of a nuclear family is certainly something that is what Luke was looking for, particularly being disconnected in the suburbs. It feels like it's been forced upon us over the last 100 years. And he wanted to challenge that idea. And it's his small way of doing something and almost going back to the way things should always have been. So this is something that Luke's and Claire is sharing their story and what they've done. And their living arrangements allow Sylvia, which is Claire's mother, to stay at home and maintain the property at a lower cost because they've got the couple helping them there. So she stays at home and she quite likes it, and she's able to stay in an area that is more established, close to their friends, and there's no need for downsizing. We saw a lot of baby boomers still holding on to their properties. We've got statistics here, as we can see here, based on age demographics. And this could be something that could work for a lot of people, especially where they've been priced out of a market that they want to be in and they can no longer afford. We can see here 81.9% of people born between 1947 and 1951 in Australia were home owners when they were aged between 70 to 74 years old, based on census data in 2021. Now, we can also see for the age bracket below, 80.5% of people aged between 60 and 65 years old own property. So we can see the boomers really having the lion's share of properties, and those that are aged between 60 and 64 years old, 78.3% have ownership in property and where they're living. So we can see that has been a huge issue. Supply has definitely been something that has caused a lot of the increase because there's massive pent-up demand. And we can see as the age groups go on, the home ownership adoption is far lower, and that has a lot to do with the ability to afford. We can see those born in 1992 to 1996, so in the age bracket of 25 to 29, they recorded 36.1% home ownership rate. If you compare that to their grandparents, those born between 1947 and 1951, they had a whopping 54% ownership. So I guess the idea of multi-generational living, particularly in tough economic times, not only that, in times where properties are certainly becoming more and more unaffordable, makes a lot of sense from that side of things. Now, Claire said that having a small mortgage of around 350,000, I should say, and living in an area that has good services meant they were better able to manage their financials as cost of living rised, especially with all the inflation we've seen recently. She also went on to say her daughter needed surgery for grommets, adenoids, and tonsils, and she felt like she didn't have to make a decision on things like, paying for food, rent, medical things when having this multi-generational living, which is far more affordable. And Claire also goes on to say that having an adult in the house, another adult outside of her husband, has meant that she and her husband could turn to her mother for advice, and that her mum's a bit different to how she is, and that it's a good thing because she gets to get a different perspective on life and different angles and stuff. And the living arrangement works because they treat it more like housemates rather than a mother and daughter relationship. So definitely interesting to see this movement. We've got some detailed statistics here from Edgar. He's a researcher from University of New South Wales, and he talked about the circumstances that drive people to multi-generational settings. In the US, he did note that there was a doubling over the global financial crisis, and we've seen a small increase in Australia up to 335,000 households with a 3-generational living arrangement. And the main things, whilst financial is especially one of the main drivers, especially the cost of care for young and elder adults influencing the decision for multi-generational houses, he also said that family connection was another thing that those looked for and benefited from. Particularly we saw with COVID and a lot of isolation. Let us know in the comments below what you think. Now let's move on to the next thing, where Seb had a question around, can we do a video on income affordability? How much I need to earn per week to make a 500 or 600,000 or over loan work? So Seb, thanks for your suggestion. Let's have a look at this and dive into it a bit more detail. So Seb, if you jump on our website on how much you can afford, you can actually get a calculator that'll help you do this at a very high level, and you can play around with the numbers to see what you can borrow. So in this example of how much I can borrow, we're going to say you're a single applicant with no dependents. Adopt a 6% interest rate when you're doing an assessment. This is the assessment rate that banks use. They're using a little bit higher at the moment. Once again, this is just to give you an approximate idea of what you can afford. And let's say you're earning 100 grand a year. So that's a net fortnightly income of $2,884 per month. What that actually means is your borrowing power that you can lend is $653,000. Now that's pretty accurate. So if you're wanting to play around with your ability, you have any liabilities, you have any children, you can update these figures and it'll spit out a pretty accurate assessment. If you would like to have a chat with us, hit the get a free assessment. We can actually have a look at your borrowing ability and what it looks like. Now, to give you an idea, if you wanted us to look at the exact specificities, let's say on 100,000 income, single applicant, no children, no nothing ongoing, your borrowing power is going to be about 645,000, similar to what the calculator spat out there before. If you're on $80,000 per annum, you're going to be able to borrow about 527,000. And if you're on 60,000, your borrowing power will reduce then again, 396,000. One thing to keep in mind is what we have seen with all these rate rises is the bank's assessment rates are changing. So previously, increase in interest rates, the assessment rates that banks were using was about 5.25%. Now that's increased to about 6.5%. Every 0.5% increase on the assessment rate actually reduces your borrowing power by about 5%. So if your previous capacity was 500,000, that means a 5% reduction would bring you to 475,000. So something to keep in mind as we see the Reserve Bank continue to increase rates, the borrowing assessment will keep reducing, which we're seeing has a knock-on effect to property values, because in turn, what people can borrow has a direct relation on what properties are likely to going to sell for down the track. Here at Hunter Galloway, we're mortgage brokers. We're based in Australia. So if you're living in Brisbane, you're in Sydney, you're in Adelaide, you're in Melbourne, you're needing assistance with a home loan, we can help. There's no cost for our service. We help Australia-wide. So call us on 1300 088 065 or visit our website, huntergalloway.com.au. Hit in the free assessment. You'll get a call from Josh, Jaden, and myself. We'll have a chat, run through your details and see what we can do. As always, guys, thanks for watching. And if you do have questions, Seb, hopefully we've been able to answer that for you. If you'd like us to expand on it, give us a call. But if you do have questions, leave a comment below. I'm reading every one of them, looking for any questions that you have that we might be able to answer for you. Guys, thanks again, and we'll see you soon.